Okay, so to start with, as you all know that we'll be covering the topic which is known as technical analysis. I hope that everybody who is attending the webinar knows the basics of stock markets and is a veteran trader who trades in the market. So I'm skipping the basics of markets and coming directly to the analysis part of the market. So why analysis? So basically, first let us understand why do we need analysis. I mean, to answer it correctly, I mean the losses in the markets need a trader to focus a bit on analysis. So let's say you think that the markets would are maybe very highly oversold, but is there an opportunity to buy in the markets and then earn money out of it? Yes, there is an opportunity. Where to buy, when to buy, what price to buy, what stop loss to keep, what targets to keep. That is all decided on the basis of the analysis which you do in the markets. So today we'll be covering the technical analysis side of the markets, wherein we study the charts, patterns, breakouts, some indicators, and how exactly you can master the art of trading and master the art of trend analysis in the markets. Now the screen which is being showing currently at your screen, which shows that what exactly a chart is. So how a chart is formed, how a chart moves, a basic line chart. So basic line chart is nothing but so as you can see in this particular chart, this is a line chart. A line chart is the most basic kind of chart which you can see, and this chart is formed by joining the closing price of the stock at different levels. Now the another very common type of chart is bar chart. So as you can see on the screen that a bar chart is a chart which is formed via using a bar. So bar is nothing, which is also known as OHLC, which is open, high, low, close of a stock. So OHLC chart is a chart wherein a particular bar will represent the opening, high, low and close of a particular stock or a commodity at a particular given point in time. So if we compare a line chart with bar chart, so basically a bar chart is capable of giving us more information as compared to a line chart, wherein in a bar chart you can also see the highest and lowest point instead of only closing point. So in a line chart you will only be seeing a closing point, but in the bar chart you will be able to see open, high, low and close points also in a particular chart. Now the next kind of chart is known as candlestick chart. As you can see, the bar is being replaced by a candle out here. So there is a green candle or red candle. So green candle is a candle where the closing is above the opening point of the stock, and a red candle is vice versa. So the candle color automatically says that what kind of candle it is. Some represent the green chart, green candle as a white candle, and the red candle is a black candle. Now this is a practical indication of how a candlestick chart is being formed. So as you can see, there are different colored charts. Some are green, some are red. So as they say, a chart or a picture represents 1,000 words. So if I plot the closing prices of the stocks in an Excel sheet, or let's say in a spreadsheet, and at the same time I plot the same closing prices or open, high, low, close in a chart, so you would guess, what would be easier for you to analyze what the future trend of a chart of a stock is. Now let us move towards a bit of practical implementation of how you can practically implement technical analysis, and how you can use technical analysis in your day-to-day life, or maybe in your daily trading applications, to analyze and see that whether you should buy, sell, hold a particular stock. So out there at your screen you are seeing that how you can draw a resistance trend line. So trend line is a line which shows the trend of a particular stock. So what I have done here is I have joined the peaks or the top of a bar and joined a line. So as you can see, what I have done is I have joined the peaks and drawn a line. This is what I have done. And this line is being drawn. So this line shows that the trend line which is on your screen is a resistance trend line, and the stock is getting resistance at all the top points. Now this is the support line. So as you can see, support trend line wherein it joins the trough, which is the bottom of a candlestick or a bottom of a bar chart, and shows the support line. So in this particular chart, what you can see is I have generated a buy signal on the chart. So what I have done is, maybe I have joined the resistance line, and the place where the stock breaks above the resistance line give me a buy signal. So as you can see briefly that this buy signal had come somewhere at around 400 rupees, and that stock moved directly from 400 to 1000 rupees. So you can see how effective these trend lines are. So these trend lines could be drawn in intraday chart, maybe 5-minute chart, 15-minute chart, maybe a daily chart, a monthly chart, or a combination of different charts. It could be used for very short-term trading signals. So let's say intraday 15-20 minute trading signals, or maybe a one full day trading signal, or maybe a positional signal of 2-3 days, 4 days. So it depends on how you use the trend line. So I always say in my webinars that trend line is the most basic yet the most effective. The most effective way of generating a buy or sell signal is trend line. So next time when you're going out and buying a share, just put up a trend line and see what kind of breakout that particular stock has given. I'll be showing you how you can practically use trend lines in MetaStock when we'll be at the end of the webinar. Now let us move forward. Now this is how a sell signal is being generated. As you can see, a sell signal is generated when the stock breaks below the support line. So whenever the stock breaks below the support line, which means the line which was giving the support to that particular stock is no more valid as a support line for the stock. So as you can see, this signal was generated somewhere at around 680 rupees, and it gave a target till 450 rupees.
So I'm getting almost 200 odd points of target out of this particular trend line. So this is how effective these trend lines are when you use those trend lines in the technical analysis side. Now the next chart which you are seeing on your screen is a trend channel. So what a trend channel does is that it plots the complete journey of a stock in a channel formation. So as you can see, this stock is moving in a trend, in a range, in a trading range, and we have plotted a resistance and a support trend line on this particular chart. So now how to use this particular trend channel, let me show this to you. As you can see out here, whenever the stock touches the resistance line of the trend channel, you can sell this stock. Whenever it touches the bottom of the support line or the trend channel, you can buy this. This is a very simple strategy, yet highly effective. So this is how you can make money in a trending kind of stock. Now in the next chart, what you can see, we have drawn small trend channels. So the stock moves a particular stock. Let's say if I take a stock, let's say Reliance or Nifty for that matter. So in a 6-month period chart, I can draw around 50 to 60 different trend channels. So these channels could be an intraday channel. So let's say in an intraday, the stock was moving in a channel, or let's say in a 5-minute chart, the stock was moving in a channel and then it broke out either ways of the trend channel. So this is how we can use trend channels for plotting the buy sell signals or for generating the buy sell signal on the stocks. And mind you, these technical analysis are not only valid for stocks, it is valid for any and every security which is traded on the markets, may it be gold, silver, crude, commodity, NCDX, or maybe NSE, BSE, FO, or options. So you can use technical analysis in each and every kind of maybe security which is traded in the markets. So now with that brief session on trend lines, we are moving towards the pattern formation. So you might have heard so many technical analysts maybe on television or maybe even discussing with some technical guy, that stock is making maybe a double top formation, that stock is maybe making a double bottom formation, and things like that. So as you can see that this is a pattern which is known as double top formation. So in the double top formation, what happens is that a stock makes a top at 2 times at the same level, at almost the same level, which shows that the stock is getting resistance at the same level at multiple times. So which is a signal that the stock could be bearish. So let me show a practical example to you guys. So this is how practically you can implement double top formation in a stock. So what I have done is I've used this particular on a chart. So let's say this is the first top, this is the second top, and the stock has made a double top formation. The stock has retraced from the double top formation and we had given a sell signal. So it made a double top briefly at 243 rupees. We gave and it break the neckline at 187. So from 187 it moved all till down to almost 131 rupees.
which is 56 rupees. So that 56 rupees is the distance between the neckline and the top of that particular pattern. So this is how the targets and stop losses are generated, and this is how we as technical analysts generate the target and stop loss of a stock. So this is the double bottom formation. So it's complete opposite of the double top formation. So in the double bottom formation, what happens is the stock forms a bottom at more than one time at the same particular level. So there could be triple bottom or multiple bottom also. So double bottom is the start of forming the bottom. So this particular stock is forming the bottom at the same point at two times. As you can see in this particular chart, what I have done is I marked two different bottoms. As you can see, this is the second and this is the first bottom. The stock gave a breakout and it moved handsomely from the breakout. So it gave a breakout somewhere at 160 rupees and it made a high of somewhere 420 rupees. So almost double the price. So this is how effective the double bottom formation or maybe the double top formation is in your daily day-to-day technical analysis. So also just to share, technical analysis is a very vast topic. So we at this particular webinar are trying to showcase you some very effective yet very easy to use technical analysis tools in the market. Now the next pattern which we are using is a head and shoulder pattern. So in a head and shoulder pattern, basically what happens is that the stock makes a head and shoulder formation. Let me show you what I mean by a shoulder and what I mean by a head. So as you can see, this is the left shoulder, this is the head formation, and this is the right shoulder formation on that particular stock. The red line which I have drawn is the neckline which joins the bottom of the head and the shoulders of that particular stock in the pattern formation. So whenever the stock breaks below the neckline, you can give a sell signal in a head and shoulder formation. So now let me show you this thing in a practical, more practical way. Okay, just to share that we are getting some questions in the mid of the webinar. I sincerely request you guys to please note down your questions and send all these questions at the end of the webinar. So then we'll be, more than happy and more than willing to take your questions and answer the questions. Okay. So this is how the head and shoulder pattern looks like in a practical scenario. What we have done is we have drawn a head and shoulder formation on the DLF stock. So this is the left shoulder, this is the head, and this is the right shoulder. So the stock gave a break just out here. So this is where the stock has given a breakdown. So this was the neckline breakdown, as you can see, and the stock break drastically from somewhere around 290 rupees to 110 rupees. So this is how you can see the head and shoulder. So head and shoulder is very effective in maybe if you are trading in intraday or maybe a positional trade. So it is very effective that ways. So this is an inverted head and shoulder. So the head and shoulder which you just saw was used to give a sell signal. Now let me share you that interestingly head and shoulder, which is an inverted head and shoulder, can also be used to give a buy signal. So the technical analyst guys, the guys who work around, the guys who make technical analysis, have used these patterns in each and every different way which they can use these patterns and make out the trading signals. So this is how a inverted head and shoulder pattern would look like practically in a chart. So let me highlight this. So this is the left shoulder, this is the head, and this is maybe the right shoulder on that particular stock, and the stock has given a breakout and handsome breakout. So as you can see, the stock had given a breakout somewhere. This is a Nifty chart at 4850 levels, and it touched almost 5400 levels. So this is how effective these breakouts are normally in a head and shoulder pattern. So most of you guys, I mean, I guess must be wondering, okay, this guy is telling such great things about technical analysis, targets of more than double. I can make, 10 lakh rupees could be 50 lakh rupees in a month. Is it so easy, the technical analysis? But let me share a practical thing with you guys. So learning technical analysis is always easy because there is a mentor guiding you, your way to the end. But when you practically implement technical analysis, you need high precision, high research, and very much practice on hands-on practice on the technical tools. So I'll just suggest you guys, if any of you are really interested, just do a demo thing out of your call. So let's say if you think out of just the end of the webinar, you think, okay, now I've learned technical analysis, let me go out and venture out myself in the technical analysis and take my trades from tomorrow via the technical analysis. Don't do that. Simply do not go out and venture out with a technical analysis straight away from this webinar. Take out at least 20-30 demo calls, see whether these calls are working or not, what are the problems you are facing in those technical analysis, try to correct those problems. Search the internet is full of tutorials of technical analysis, and maybe you will be also getting the video of this particular webinar very short on the SAS Online platforms, for viewing it repeated times. So you can go out there, you can see how technical analysis is done, and do a dummy trading, demo trading before venturing out with the real money. So let us move forward in this webinar. So the next pattern which you can see is the flag pattern. So flag pattern, as the name suggests, is similar to a flag formation. So what you are seeing out here is that it has a pole, which is the pole of the flag. This is the main body of the flag, as you can see, and this is again the extension, the higher pole of the flag, which is known as potential price target. So the flag pattern is broken down into 3 different elements to really call it and really qualify it as a flag formation. So this is how practically a flag formation is made. As you can see out here, the stock made first a flag pole, as you can see. Then it made a flag formation, and then it gave a handsome breakout, and then it touched the target. So the target is normally equal to the flag pole. So as long as the flag pole before the flag formation is as much would be the target, potential target. So although these are theoretical concepts, that you should get equal targets, but as a trader you should always keep a trailing stop loss via the moving averages in case the pattern reverses and pattern goes wrong, which is more known as trader's remorse. Now let us move on from the patterns to some of the indicators which are more fancy, which are more ready to use, which are more easier for maybe a trader to understand and use in the real technical analysis market. So first indicator which we are using is a Bollinger Band. So Bollinger Band is nothing but a band around the, maybe a band, a pricing band around the stock. So this is how a Bollinger Band is being used. So Bollinger Band is nothing but makes a band which is upper band and a lower band, which is made by normally using a 20-day simple moving average. So this is how a normal Bollinger Band is being made. So whenever the stock touches the top of the band and again it moves below the 20-day moving average, you can sell. And when it touches the bottom and moves above the 20 DMA, you can buy the stock. So next indicator which we are using is a CCI, which is known as a commodity channel index. So as you can see, let me show you a practical instance of CCI. So this is a CCI being plotted. So the range is unlimited. I mean, you can get in minus 2000 maybe or plus 1000 kind of levels also. But the major trading range is 0. Major trading range is 0, plus 100 and minus 100. Now let me decode how CCI works. So as you can see, this is the CCI indicator, which is just moving above the 100 minus 100 mark, and we had given a buy signal on the charts. As you can see, the stock moved drastically from the levels of 65 to briefly the levels of 100 rupees, so almost a movement of 35 odd rupees, and there it gave a sell signal. When it moved below the 100 mark line, again we gave a sell signal. So this is how it is used. So whenever CCI moves below 100, give a sell. Whenever it moves above minus 100, you can give a buy signal. Above 100 is the overbought zone and below minus 100 is the oversold zone of the stock. Now overbought is when the stock is highly being bought. So let's say we sometimes say that the stock is highly bullish. It is bullish since last so many trading sessions, और हम हिंदी में बोलते हैं बहुत तेजी है, sellers है ही नहीं market में. So that this is how is known as a overbought in simple terms. Next indicator which I'll be sharing with you guys is an MACD, which is a moving average convergence and divergence indicator. So this indicator is an indicator which has a 0 mark line, and the moving average of that 0 mark line is being done. So that 0 mark line is nothing but the 12 minus 26 exponential moving average of that particular stock. So let me show you practically. So the above quadrant, the first quadrant is of MACD and the second quadrant is of the stock, which is Reliance out here. So as you can see, whenever there is a negative crossover, which is if the darker line or the moving average 0 line or the baseline crosses below its moving average, it gives a sell signal, as you can see out here. Whenever it moves above that line, it gives a buy signal, as you can see out here. So it's a very easy indicator, but just to share with you guys practically, whenever I have used MACD, it works perfectly when you are a positional trader, let's say 6 month to 1 year kind of trader. It is that time when it works perfectly. Okay, I've just got a question or maybe a comment from one of the aspirant that it is too much for a new trader, and he has also put in a smiley. So I accept this thing and I also acknowledge this thing, but the point is a new trader one day or the other day has to gradually move towards an existing trader or maybe a professional trader, and maybe this could be the first step for you guys to move towards the next leg of trading. So as I already told in the webinar that not everything in the webinar which I teach you can take at on the face value at your home. You can take 1 or 2 points at your home, practice it. You have any question, you can mail at learn@sasonline.in and we'll be more than happy to answer your queries on the technical analysis side. So let's just move ahead, and the reason why I took this particular question is because I was thinking that everybody out there must be thinking the similar way. So do not worry, we are near the end of the webinar and we will be entering the most interesting part of the webinar, which is the practical implementation of the webinar on Metastock. So just hang on for some time and then you will be enjoying the webinar to the core, because then you will be seeing the live calls being generated. So whatever I am teaching here is not theoretical. I'll show you practically how I can implement my theoretical concepts into the practical technical analysis. So just hang on, we'll be moving to that part also. So moving on. So this is the moving average, and if anybody is new to the technical analysis, I would suggest that you start using technical analysis with a moving average straight away. So moving average is the most simplistic and most effective way of technical analysis kind of thing. So moving average is nothing but an average of a stock. So let's say if I say it's a 7-day moving average. So every 7th day, what is the indicator does it adds the closing price of last 7 days and then creates a continuous line. So every new trading day, the moving average moves on, taking the last trading day as the 7th price. So as you can see out here, whenever the stock moves above the moving average, it gives a buy signal. Whenever it moves below the moving average, it gives a sell signal. It is very clear and simple. So you can also use this moving average as support and resistance line. What I have used here is that moving average, which is a 35-day moving average, I've used as a support and resistance line. So whenever the moving average is above the stock, it moves, if it acts as a resistance line. Whenever the stock moves above the moving average, it gives a buy signal on the chart. So it's very pretty clear and simple. So now let us move on to another signal, which is known as RSI, which is relative strength index, and very commonly used by different traders. So RSI is nothing but an indicator which moves from 0 to 100. Again, there are some questions coming out on how you can use the technical analysis. For all those who have just joined in, I would request that everybody please note down your questions, and we'll be taking the questions at the end of the webinar session. So do not worry, every question will be answered in this particular webinar, and just hold on for some time and we'll be taking the questions at the end of the webinar session. So RSI, as we were discussing, is an indicator which moves from 0 to 100. So when the RSI is below 30, the stock is known as oversold. Whenever it is above 70, it is known as overbought. So now let me show you how you can generate trading signals, buy sell signals using RSI. So whenever RSI moves above 30, as you can see out here, whenever it moves above 30, it gives a buy signal. Whenever it moves below 70, it gives a sell signal. So this is how it is. So it's very pretty clear and simple and plain vanilla a kind of indicator to use in the technical analysis. So whenever the RSI moves below 70, you can give a sell signal. Whenever it moves above 30, you can give a buy signal on the charts. Now, as a technical analyst, if you are a veteran technical analyst, what you can do maybe is you can mix your maybe moving average with RSI, or maybe trend line with RSI, and different kind of technical indicators. So you get a double, triple kind of confirmation when you are trading in the markets. So the next indicator is stochastic oscillator. So this indicator is mainly used for short term or very short periods of trading. So that this indicator moves again from 0 to 100 as it is a percentage indicator. Whenever the indicator moves above 20 line mark, it gives a buy signal. Whenever it moves below the 80 line mark, it gives a sell signal.
It's again a very pretty clear and easy kind of indicator to use. So with that, we are almost at the end of the webinar, and we'll be now opening the forum for you guys for some queries. So if you have any queries, I'll ask you guys to please peep in your queries, and we'll be more than happy to answer with your queries. In the meantime, let me also show you some technical analysis on how practically you can do some technical analysis. So let me put up a chart of Nifty out here. So this is a plain chart of Nifty. Let me show you how I will be using my technical analysis out here. So as you can see, this particular point, I am finding a kind of double bottom formation out there in the chart. Maybe if I convert it into the line chart, it will be more simpler for you guys to understand. This everything I'm drawing in front of you. Nothing is pre-drawn, nothing is drawn in the charts. This software which I'm using is known as MetaStock. You can easily find MetaStock on the internet, and you can easily find the subscription of that particular stock. There are many different websites also, Yahoo Finance, Google Finance, maybe iCharts, which give you free technical analysis. So getting a technical analysis tool out there today is not a difficult task. So what I have done is I have put in a double top, a double bottom formation. So this was my first confirmation that okay, this stock, the counter is somewhere making a bottom, and maybe I can somewhere go out and venture out with my buying kind of strategy. So what next I would be doing is I will be getting a confirmation maybe out of a moving average line. So what I've done is I have drawn a 25-day moving average line. So this red kind of line, I hope everybody can see this line. This red kind of line is known as a moving average line. So out here, somewhere out here, let me draw this thing and maybe put an indicator out here. So this is all I'm doing in front of you. I mean, nothing is pre-made, just to tell you that technical analysis, because what we have been hearing, we talk to different kind of traders, some new, some very old, 25-30 years in the market, and they say that this is all fake. I mean, when the stock move up, you say that okay, we have told you to buy this stock and vice versa, but this is a practical technical analysis. Okay, they put in a question that please tell the software name. MetaStock, METASTOCK, MetaStock software. So what I've done is, first confirmation I found somewhere near 7,000 mark. It was on the budget day. I found that okay, the stock is making a bottom on the charts. Let me write down my check for buying the stock, and let me wait for some more confirmation. It again broke above the 25-day moving average. So then I told that okay boss, now I'm pretty much sure that I should now go out and buy this particular stock, and venture out with buying in that particular stock. I went out and bought that particular stock, and the stock is almost at 7,500 DAI. So my first indicator was somewhere at around 7,000 mark. It again got confirmed at 7,150, and I bought at 7,150, keeping maybe 7,000 as a stop loss, and my target was somewhere 7,600 or 7,530, 7,550, and the my target is almost reached. So this is a practical implementation of the charts.
Now, if you guys have any queries, and those guys which are asking the queries in the middle of the webinar, please shoot your queries. I'll be more than happy to answer your queries. So if you have any queries, feel free to shoot your queries, and we'll be more than happy to answer those queries. Okay, so there is a query, can I use this in the Nest Plus? Yes, you can use these charts in the Nest Plus also. So a question is the moving average really works, sir? I mean, you can see in front of your screen that how the moving average is working. So I mean, I need to say nothing more. Another question is, please show us the trend line on Nifty chart. Great question, and let me show you the trend line implementation also. So let me clean up my chart so you guys can understand it in a much better way. Okay, so let me draw a trend line maybe out here. So what I've done is I've drawn a resistance trend line. That resistance trend line broke somewhere at this particular level wherein I have seen breakout of the stock, and I had given a buy signal. So this is how a trend line is being used. Plain, simple and easy. Okay, we have now started getting huge queries. So I'll try to answer all the queries and as easiest way I can. So the next query is, can I see the chart in J stock? Yes, you can see the charts in how to time the market. So basically, whenever you get signals of maybe buying or selling the stock, you can go out and enter into buying or selling these stocks. For intraday, if you are using moving average, I would ideally suggest you use a combination of 5 to 7 day moving average. So intraday time frame chart is, yes, 15-minute chart. Some of them use a 5-minute chart. Some of them use a double confirmation of 15 and 30-minute chart. So it depends on what kind of strategy you use. Some of the moves for intraday. Let me show you some of the moves for intraday which I have used. Okay. Let me show you the chart of DHFL. So DHFL was one of the stocks which we were looking after for on the buy side, for mainly for today. So DHFL, let me show you how and why I gave the buy on this particular chart. As you can see, the stock had given a buy signal on the charts. Again, as you can see, this is the line where earlier the stock found its bottom. The line is somewhere at, I guess, 176 rupees. Yes. So my buy was above 178. Whenever the stock moved above 178 was my buy point. As you can see, the same zone which was acting once as a support was now acting as a resistance. So I made a call that whenever the stock breaks above maybe 177, 178 kind of range, you can go out and buy that stock with somewhere at a with targets of 184 kind of levels in maybe intraday, and keeping a stop losses at 176. So my buy was at 178, buy at 178.50, keep a stop loss of 176, And this target was, first target was somewhere at 181, second was at 184. So, ironically, our only, I guess, it touched almost the part of our second target, but first target was achieved. So this was the answer for your query, that you want to see some live implementation of how I put up technical analysis into my kind of trading strategy. So the next question which we have out here is which is the best indicator to use for day trading in Nifty options? I mean, practically my kind of trading in Nifty options or maybe options is that I do not put an indicator directly on the option chart. Instead, I put an indicator on the underlying. So let's say if I want to take a call on maybe Nifty option trade, uh, I normally put my technical analysis on the Nifty underlying and then take a call according to that. One of the clients want the video of this particular webinar. You'll definitely get a video of this webinar, and you guys, everybody will be mailed, every client will be mailed this video of the webinar. Okay, great question. And I guess if I answer this question also, I mean, then also this question will be unanswered. The question is that which is better, intraday or positional? So let me answer it this way. So let's say you is a client or a trader and who has learned technical analysis very fresh out of this webinar. Go out there, use your technical analysis on paper trading for next 50 of your stocks. Use it on both intraday and positional, and then try to see how good are you in maybe intraday or positional. So that is the best answer I can give, for this particular question. So another question is, what do I mean by downtrend? So downtrend is when a stock breaks and the current bottom is lower than the previous bottom. Then I will term that as a downtrend. Okay, what is the role of volume in the buying and selling of stocks? So basically, volume for me acts as a double confirmation. So let's say I'm giving a buy signal on a chart, and the volume is also supporting that particular chart. So this means that the volume is supporting what what maybe my analysis is saying on the technical side. Okay, the question is that you want to see support line also in this particular chart. Okay, great. Which means that you guys are taking this webinar very seriously and watching everything which I am saying, and I'm really happy when my audience is highly involved with my kind of analysis. So as you can see, this horizontal line was the support line which I used for my today's generation of calls. So I hope now it is very clear to you that what support line I was talking about. How to use volume, which has already been answered. How it decides stop loss by using moving average? Fantastic question. Let me give you a practical maybe answer on this. Great. Okay. Okay. Now I am using the same chart, which is DHFL chart, on which we had generated a buy call, and we had given a target of 184 and it got achieved today. So okay, so this is a short-term moving stop loss which I am using. What I have done is let me remove the unnecessary indicators kind of things, so you will be more. Okay, so what I have done is I have put in a moving average, a simple day moving average on this chart. the current price which comes on my moving average is somewhere around 167. So this is my stop loss. As the chart moves up, my moving average would move up. Any day the stock reverses and breaks below the moving average, my stop loss would get triggered and I'll exit my position. So this is how I use stop loss with moving average. So how to use charts in intraday? Basically, my style of technical analysis is I mix intraday with EOD or maybe daily kind of chart. So let's say I'm getting a buy signal in intraday chart. I'll go out and see what kind of signal, what kind of cues it is giving in the daily chart, and then I'll mix and put out my call. Okay, they want my strategy in Bank Nifty. Okay, so perfect strategy in Bank Nifty. So as you can see that what I did was there were three candles being formed out here. The last candle was a candle which engulfed almost the earlier two candles and had a lower low. So as you can see, the low of this candle was somewhere at around 14980. The high of this candle was somewhere at around 15394. So what I did was I placed my sell point somewhere near 15300. So I put in a sell at 15300. My stop loss was the high point, which was the previous high point, which was 15394 or briefly 15400. So I gave a sell on for 15300. The stop loss was 15400. My first target was briefly at around 15200 and second target was briefly at around 15095. So this is how I used Bank Nifty call for my intraday. So volume, again the questions are coming from volume and these I guess are repeated questions, so we have already answered about the volume. So how to find a trending day and a range bound day? So ideally what I prefer is if you want to term a particular day as a trending or a range bound day, you will have to wait till 10:30 a.m. So at 10:30 a.m. if you see that the volumes are drying up, the average advance to decline ratio is almost even Steven 1:1, which means it is a more of a range bound day. If advance is more than decline maybe by 30-40%, which is 1.5:1 kind of ratio, so this is how you can think that it is rising or maybe falling. Okay. A question is how much fund is sufficient to make a living by day trading, at least 25,000 per month? How much you feel that what is the sufficient amount? Sir, I would like to answer it in this way, that rather than amount, it is your strategy how you can make. Believe me, technical analyst guys have made 20,000 made that 20,000 capital to somewhere around 2.5 lakhs in 1 month. So it may sound very astonishing to you and maybe very unreal to you, but we have seen guys who have made 10 times the capital in the same day. So it doesn't matter how much capital you bring in, 50-60,000 capital is sufficient for you guys if you know proper technical analysis or you have a good investment advisor with you. So is technical analysis work for every stock? Yes, almost 99% of stocks technical analysis work. For jobbing, how many minutes chart I need to follow? For jobbing, I guess you will have to follow 5-minute chart. So I guess we are at the end of the questions session, and I guess I have answered all the questions. So I hope there are no further questions, and we would like to end this webinar now. I would like to thank everybody who attended this webinar, and we have started. I was just about to end my webinar, and I've started getting thank you note, and looking forward to more of such sessions. So before ending the webinar, I'm just putting up a poll for everybody, which is a poll which asks you guys that what time you are more comfortable in attending the webinar, which is you guys are maybe on weekdays post market, or maybe Saturdays first half, or maybe second Saturdays second half. So I'll request everybody to please poll in, so the next time we do webinar, we want almost 100% attendance. So although attendance today was very handsome, and I was very happy to see this kind of attendance in our first webinar. So the poll is currently going on. So you guys are still polling. Some of you guys have still not polled. Almost 67% of both them are voted, and 70% of them are now voted. I suggest each and every body of you to poll. Okay, I've gotten one more suggestion that please take session in Hindi next time. Sure sir, हम बिल्कुल अगली बार इसको हिंदी में लेंगे. Maybe I should have put in one more poll that how many of you guys want it in English or maybe Hindi. तो मुझे तो हिंदी में लेने में कोई प्रॉब्लम नहीं है. I'll definitely take it in Hindi also. Any software for technical analysis? Yes, you can use Metastock, and there are different kind of softwares. Still, only 81% of guys have voted, 83 have voted, and I'm positively surprised that you guys are taking the poll very, very seriously, and most of you are polling off that you want on weekdays post market. So that sounds great. So the questions keep on coming. That another question is how to be patient while day trading. Keep your stop losses tight. Believe in your analysis, and your patience will automatically come. Patience is nothing which you can get out of from outside. It comes from inside. And believe me, patience is the hardest thing in the market. If somebody has patience in the markets, he'll definitely make money. No chance of his losing money in the markets. There are different kind of softwares. The question is ME broker better than MetaTrader? I mean, to answer it very, very practically, I don't believe that a particular software is better than a particular software. It is you how you can use that software. So both the softwares are good. So there is a question that a trader has lost huge amount, maybe somewhere around 2 lakh in the market. So I mean, the only thing which I can say is you can use maybe technical analysis in paper trading, and if you feel that you are getting 80% plus kind of accuracy, then you should go out and venture out again. So okay, again some guys are sharing that you should take the next seminar in Hindi. I'll definitely take it. One more thing which you guys can do, there is an email ID learn@sasonline.in. You can share in your queries, your suggestions for next webinar. Next webinar would be somewhere in the weekdays only, according to what I am getting in the polls. So put in your queries if you have a query on stock, or let's say you want me to talk on a particular stock, a pattern, or maybe an event. So I'll be more than happy to cover those points in my next webinar. Any book you want to refer? No book business. Go out on the internet, stockcharts.com. Stockcharts is the best website. Just Google stock charts and you'll find that particular website. So with this, let us now end the webinar. We have got 85% of you guys have voted. The next webinar date would be soon mailed, I guess most probably the next Thursday. And if there is a change, you guys will be intimated. So thanks everybody. Thanks for attending. This was the learning team from SAS Online. Hope you all make huge money and uh, do good in your trading. Happy learning, happy trading. Thanks.